You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome. Today we're looking at some really fascinating shifts happening across finance and tech.
Yeah, the market's buzzing, valuations are kind of wild, tech's moving incredibly fast.
Exactly. So our goal for you is simple. Cut through the noise, find the key insights, the surprising stuff, so you really get what's going on in this, fast-changing scene.
And we'll help connect those dots, look past the headlines, and figure out what it all actually means for how finance might work tomorrow.
Okay, let's dive in. First up, some pretty big moves in the public markets, or potential moves anyway. Wealthfront.
Ah, yes, the automated investing folks.
Right. They've confidentially filed for a U.S. IPO. This is, 2 years after that UBS deal fell through?
Mm-hmm. So they're pushing for independent growth again? Makes sense?
And then there's Navan, the travel and expense platform, also filed confidentially.
Oh, that's interesting. Could be the first major B2B SaaS listing in a while, right?
Seems like it. They're showing over $300 million in ARR, focusing on profit, too.
And what's insightful there, I think, is how these filings sort of whispered that the public markets might be cracking open again, especially for enterprise software.
A sign of confidence, maybe.
Cautious confidence, yeah. Investors seem ready for companies that aren't just growing, but growing, profitably.
Okay, now, here's where it gets really eye-opening. The valuations. Just, wow, Circle.
The USDC issuer.
Just hit a $74 billion enterprise value. $74 billion.
Which puts it where?
Higher than Robinhood, Nubank, Block. It's right up there knocking on Coinbase's door.
That's incredible. And USDC itself.
$60 billion market cap, growing like crazy 90% year over year.
That Circle valuation isn't just a number. It says the market sees stablecoins as like fundamental infrastructure now.
Not just some crypto niche thing.
Exactly. It's the plumbing for the digital economy. That's where serious value is seen.
Right.
And it's global. Look at PhonePe in India.
Backed by Walmart, right.
Yeah. Aiming for maybe $1.5 billion IPO, could be up to $20 billion valuation. They even moved HQs to India. It's a big play.
And it's not just company valuations. We're seeing huge potential payouts, like for Revolut's founder, tied to maybe a $300 billion plus value down the line. Plus, crypto prediction markets like Polymarket and Kalshi hitting billion-dollar levels.
So the big question this all raises is, what does this flood of money and these massive numbers tell us about where fintech is actually heading? What's the demand driving it?
Good question. And maybe part of the answer is in the plumbing itself, the strategic moves and payment innovations, like Xero buying Melio for $2.5 billion.
Taking on QuickBooks, basically.
Correctly. In accounts payable receivable, Melio's got, 80,000 U.S. customers, $30 billion in payment volume. That's significant scale.
It really underscores how vital smooth B2B payments are, which ties perfectly into that other huge shift, stablecoin rails.
Yeah, Shopify, Stripe, Coinbase, using USDC for checkout.
Think about that. Using stablecoins pegged to the dollar potentially eliminates FX fees, cuts out those annoying settlement delays.
Especially for cross-border stuff. Shopify has 14% of merchants doing that.
It's a massive efficiency game, a real game changer for them, and puts huge pressure on the old ways of doing things.
Definitely. And there are other, maybe smaller but still clever innovations popping up too. Visa and Spreedly have this just-in-time card updates thing.
Stop recurring payments failing.
Exactly. Uses Visa's account updater. And MasterCard's got this account-to-account instant payment sandbox in the UK.
Modernizing bank payments there.
Right. Plus, look at mortgages. Frollo in Australia has an open banking portal for brokers. Lets them get client financial data directly, with consent, obviously, via CDR.
Streamlining loans, less paper pushing.
Totally.
So if you, connect all these innovations, the theme is clear. Efficiency, accuracy, less friction, making money move smarter, faster for everyone involved.
Which kind of leads us to what's next.
Especially with AI.
Right. AI is everywhere.
We saw a 16Z's playbook talking about embedding AI in workflows, using unique data, focusing on real business value, not just hype. Makes sense, like Renee Lacerte from Bill talking about how they use it for small business payments, M&A strategy.
Yeah, and Spinwheel just raised $30 million Series A for their AI credit tool.
So AI isn't just a buzzword here. It's becoming part of the actual operational fabric of finance.
It's really something, isn't it? The speed of all this change, the constant disruption. It feels like every week there's something new shaking things up.
Absolutely. And it makes you wonder, with all this investment, all this innovation we've touched on, What completely new financial tools or services are going to pop up in the next, say, 5 or 10 years?
Things we can barely imagine now.
Exactly. How might those fundamentally change our daily financial lives? It's definitely something to stay curious about.
Spoken Tech for your ears.